Hey guys, welcome back to another video on my YouTube channel. Today we are learn about how to the how the rich re- legal pay almost zero taxes, seven taxes loophole explained. Okay, let's start this video. Okay, and let's start this seven tax loophole. The rich use used to pay a less and build more wealth. There are variety of ways to get wealthy and stay wealthy. However, not all methods are just about having a high earning job. In fact, many wealthy people are super skilled at using all the tax loopholes available to them, minimize their taxes and maximize their wealth. Here are some of the key tax loopholes the rich use to attain and keep as much of their wealth as possible. Okay. Number one, lose money of purpose. Can you imagine being so wealthy that it's to your advantage to lose money money that's one strategy the wealthy use know as tax loss harvesting. It turns out there are tax benefits to losing some of your wealthy though never in it to actually make you poor. Typically what the wealthy do is sell investment when they are low or then make other similarly a valued investment instantly a belching out and gain made with the losing taken. Not only does this keep your money invested, it reduce your tax liability. Okay, rule laws forward. Wealthy people often start numerous businesses venture, yet not every businesses turn a profit immediately. When that happen is considered a net loss. The IRS allow of our business owners can carry forward and operating in lose to a year when it might make more or tax scenes for the business by lowering the that year's taxable taxable income. Find out. I asked ChatGPT. Okay, sorry. Next is uh, pick high income high high tax income into tax advantage accounts and policies. There are numerous ways wealthy make money beyond just earning in basic income, typically through form of investing. In the wealthy often take gain they make from investments, stocks, real estate, and dividend dividends, and put those otherwise highly taxable amounts into their tax advantage accounts such as retirement accounts. The over wealthy he have an other trick, which is to buy into ever prices private placement insurance places which earn interest. You cannot only invest the insurance places money in high growth options like hedge funds. You can and borrow money from these assist, and if you cancel the policy and get all your money back, you won't be taxed. Additionally, you can leave these policies tax free to benefactors. Tax small salaries. If you earn any income from an employer and receive a W-2 or at the end of the year, most people pay their share to the IRS before their uh, paycheck hits their bank account. The more you earn, the higher your tax bracket leaves, meaning the more you pay in taxes. The wealthy, particularly when they are running campaigns, often take ever small salary to get around paying big taxes. For example, Jeff Bezos' base salary before stock compensation and other benefits weigh only around $81,000. Okay, do you tax it like this? Rich and save money. Okay, tax the rich. Tax the rich is a popular mantra, but that relies on their change the tax code. Will you wait? Expert suggest you take the tax code into your hands and instead to do your taxes like the rich. Sitting is a question on who contribute the most to U.S. tax revenue. In 2022, the top 1% of taxpayer accounts for more income taxes paid than the bottom 90% combined, according to think tax foundation, and some of their previously leaked tax returns and a conversation with tax professional for our ultra high net worth individual can often a window into how over rich Americans project transfer and grow their assets. How to use a Roth IRA to avoid taxes and grow wealth. Billionaire Peter there, uh, T. DL famously contributed $2,000 in uh, 1999 and to a Roth IRA and use 1,700 of it to buy 1.7 million founder shares PayPal stock within 2 decades, which include uh, eBay buyout of PayPal and private investment in Facebook, all safely within the confine of the Roth IRA. That investment ballooned to $5 billion, which can all be withdraw tax free when the turns 59%. Roth IRA contribution contribution use after tax dollar that had allowed tax-free withdrawal after age 59, and after at least 5 years investment. By contrast, traditional IRA as are funded and with pre-tax pre-tax dollar or for an upfront benefits and withdrawal that are taxed. Okay, in 2025 you could or contribute to a Roth IRA only if your modified adjusted gross income in less than $1,15,000 as a single filer or $2,36,000 if married and filing jointly with the maximize of $7,000 to $8,000 if you are age 50 in or older. A contributing amount passes out up to $1,65,000 for single filer and 2 lakh $2,36,000 for joints.